The biggest loss of my crypto career was when I lost $7,300 in crypto on one investment. Now, this project was supposed to bring an awesome stablecoin ecosystem to the Cardano blockchain. It was supposed to bring stablecoin swaps with really low fees, stablecoin liquidity and stablecoin liquidity pools and lending protocols and staking and all this great stuff that I desperately wanted to use. Now, this was back in like early 2022, I think, maybe mid 2022. And stablecoins were like just getting started on Cardano. I think we might have had JED, maybe one other option. But as a Cardano user, I saw a project like this. Ardana was the project name. I saw a project like this with open eyes as something I would use on a weekly basis and I would be willing to invest in because it's something that I thought I needed in the Cardano ecosystem. And honestly, I'd probably still use it if it was around. Now, this conviction led me to make a few key fatal mistakes in my investing journey with this project that led me to lose thousands of dollars in the process that I probably could have put to better use, now, right? I could use it so much better nowadays, but you live and you learn. And from this experience, I've learned a great amount on how I want to change my crypto investing journey, what I invest in, and how I go about investing in kind of these like riskier projects. So we're going to break down kind of the things I've learned and the things I've changed and how I go about investing nowadays. But I saw projects like this blowing up on Ethereum, blowing up on Binance Chain. I saw stablecoins and stablecoin swapping and stablecoin liquidity going nuts on these other chains, and I knew it would have gone crazy on Cardano. There's a couple key reasons this project failed, which we're going to dive into, and there are a couple things I look for now because of this when I'm investing in crypto projects. The first thing I would say from this experience is never let a project you're invested in get too ambitious. Now, in this scenario, I was invested in Ardana, but the Ardana team was not only building Ardana, the stablecoin solution for Cardano, they were also building a ZK rollup solution for Cardano called Orbis. I should have realized that this was kind of like a little bit of a red flag because how are resources being allocated? How are all these different pre-sales and fundings going on? How is the management handling two different projects, right? There's a lot of things I could have done better in understanding why are two projects needed? Why can't we just deliver the first one and deliver it better than everyone else and then go to the second one, or take the proceeds from one and build the second? Why do we need two funding rounds, all these things? This should have been a red flag for me. I didn't realize it at the time. I didn't understand. I didn't think that it was major harm. I thought they could have hired more people and reallocated funds necessary, and that probably could have actually happened. But I should have understand that, in the crypto space, risky projects, new projects, should have taken more careful, more security, more, more control of my own funds and realize, two projects is probably not the best solution. It's not necessarily a reason to get out of a project, but I do see this happening on Cardano right now as well. I see this, there's a couple of builders building like TeddySwap and Cherry Lend. I really haven't heard much about these projects, and they're trying to build all these projects, and it's great to be entrepreneurial and, a DEX and a lending protocol or a wallet and this and that and all these different things. But if you can't deliver on one, then you probably can't deliver on two or three. And do we really need more of these projects? So you'll see in crypto these entrepreneur groups roll in, these developer groups roll in where they build like this project and this competing project or this DX and this lending protocol. So far, when I've seen this happen, I have not seen it been pulled off successfully where they make like an amazing DEX and an amazing lending protocol. So far, I have seen subpar versions of both, and it's better to go with a team that is only building one core DApp. The second biggest thing I learned from this experience of losing $7,300 is kind of to always have a point where you're going to cut your losses. Now, this could be either a price point where price of the token or price of the crypto goes below a certain amount for a certain period of time, or a development timeline. So they could either not deliver on price, where the market's just not buying into the price and it's just not happening. That's a reason to sell. There's also a reason to sell or a reason to get out of a project if the product and the delivery is just not happening. If the team is not delivering, if people are requesting delivery, or if there's promised something, or if there's like an NFT supposed to come out, or an airdrop supposed to come out, or a stake pool or an ISPO supposed to come out, any of these things that are supposed to happen that are in the roadmap and everything keeps getting pushed back or pushed to the side, or all these things, this is also a reason to get out. Ardana was pushed back, it had delays, it had all these bad things or all these different things, and I never decided to sell because I was so like, this could be the future of Cardano, and I definitely believed that, and I would still probably believe that today. I'd probably take a much smaller position today, but a stablecoin ecosystem I think would still be good. So I lacked perspective on having a reason to sell. I never had a reason to sell. I never had a reason to get out of the project. So because I didn't force myself out of the project, I was forced out on the day that they decided to shut the project down, and my investment fell by, 99%. The third thing I learned from this awesome experience is that risk is still not bad. I still enjoy being risky in the crypto ecosystem. I still think risk is good, and I would not be where I am in life without some risk, right? You got to know some people, you got to do this and that, you got to get the degree, you got to go to the place, right? Kiss the girl, all these things. Ask the girl out, all these things, right? Life is about risk, and risk is still good. I still invest in small projects. I still put my ADA to work in Cardano native tokens. I still have an awesome House of Titans NFT, right? Before I even knew that they were doing all this crazy stuff with the IAG nodes and the WMT nodes and Bitcoin mining, right? Risk is still good. We got to take calculated risk though, or limit the exposure to a certain risk. Back when I was investing in Cardano, $7,300, while I could afford at the time to take that loss, I would have been much better off just risking less. I should have realized where the market was. Again, I just didn't have the perspective and the experience in the industry I do now. I would have recognized where the market was heading, what these projects were doing, what the risk tolerance should have been at that time. Where right now, I think a much higher risk tolerance is okay, given the market cycle and the market time. Now, I still think you got to be okay with your risk tolerance if you lose everything. So if I lose all my crypto, I'm still okay. If I lose one position, I'm still okay. It's not going to affect me mentally. It will stink. It will be hard, right? I won't really enjoy the process of losing thousands of dollars in crypto, but I'm still going to be okay, and I'll still be able to rebuild, and I'll still be able to do all these awesome things in my life. So risk is good. Keep risk, right? Being in Bitcoin is still risky compared to the S&P 500 or compared to real estate, right? All these things. So there's still risk. Risk is still good, but take a calculated risk. I don't think we all need to be Bitcoin maxis or anything like that, or S&P 500 maxis or gold maxis or silver bugs or any of these things, but just understand the risk you're taking and be okay with the risk you can lose. So I would have, today, if I were to make an investment in that company, I would adjust my risk to a much smaller position. The fourth thing, listen to the majority. Back in 2022, when this project, a month or two before it went under, people on crypto Twitter, Cardano crypto Twitter specifically, started talking about how this thing was kind of unstable. I did see those tweets at the time. I did see those concerns. There were concerns of people about the project. There were also people still like me backing the project and having their investments, because you can't trust everything that you see on crypto Twitter. What I would realize now if I was investing in something like this is that the thing you have to realize is the market is the majority. So S&P 500, real estate, stocks, crypto, all these things. Yes, there are big players in the background and there are whales that start moving price, but the majority of the investors make the market in these smaller ecosystems, in Cardano, in Arbitrum, in Solana, in all these smaller ecosystems, smaller than Bitcoin and Ethereum. The majority, the market, is basically the retail investors. We can decide what is an investment we don't really want to be a part of, what is something that we do want to be a part of. A lot of the crypto community doesn't really like Cardano right now, and so the price is coming down a little bit. Or in the Cardano ecosystem, a lot of people don't like a certain token, so it goes down a little bit, right? You have to realize to pay attention to what the majority is doing. And if I was smarter back then, I would have realized people were starting to turn on the project, and from there I could have potentially used that as a reason to exit my position at about an even break-even point. Now, I do think that there's good in buying the blood, buying counter to what everyone else is doing, taking the riskier position or taking the position that not many people are talking about yet, because the future is bright. But I also think that applies more to a project that already has a working product or is continuing to build, or where nothing has changed, it's only gotten better, but price has decreased and it's still viable. So I definitely think that we need to listen to the market. Understand that the majority of the market is these retail people in crypto right now. And so listen to the market, understand what they're saying. We don't always have to follow them though. The fifth thing I would say about this experience is that you can do everything right. A project can do everything right and still fail. Whether it's, XYZ reason, projects can fail, businesses can fail, investments can fail. There can be all these different reasons, and we don't really have to explain it. You can do your best, you can invest in all these cool things, you can manage risk, you can lower your DCA price, toss some more money at it. You can get in and get out when you think is right. You can read all the indications. You can read the white paper. You can talk to the team on Discord. You can feel the community pride. You can do all this stuff. But at the end of the day, not everything's going to work out. Not all my investments have worked out in crypto. Some have worked out great. Some have worked out horribly, like from this loss. But just realize not everything's going to work out and not everything has to work out. It's just like life. You're going to have some days that stink. You're going to have some failures. You're going to have some breakups. You're going to have all these things. Life still goes on and you can still have an awesome life. So investing can still go on, and then you can still have a great investing journey and make quite a bit of money for yourself and for your family. If you give up investing after one loss, then you have wasted the loss. If you don't give up, then you get to learn from the loss and make that growth. So I would say from this experience that you got to realize that failure can always happen. Investments can always go south. It's not a reason to not invest. From this experience, I've taken much different approaches to crypto investing. I really don't like staking models where you got to lock stuff. I really don't like token pre-sales or any type of token allocation or token investment or buying a crypto before the product's out there, before the things are working, and before you can use it. I don't like buying into things that are superly overhyped or that make me feel like I need to rush to do it. Those always end up bad for me. I like investing in projects that have gone up in price, done great things, and maybe have come back and had kind of in their undervalued phase where they were awesome a couple months ago, but now for some reason the project's only gotten better and it's kind of undervalued based on where it was, where it's they delivered more and price has done worse. I like to look for these undervalued gems. I can make a whole different video on how I look and invest in some of these things, especially in the Cardano ecosystem, but really in any ecosystem I could walk in and do this. And from there, I've taken much smaller positions into some native tokens, into some much more micro cap projects or small DeFi projects. I've also invested in some L1s that I think are promising given the market cycle. But from this experience, I think you really just got to pay attention to, one, where's the market cycle and does it coincide with risk? The one thing that could be wrong with right now in the market cycle that I'm a little concerned with is the quantitative tightening still happening in America. Last cycle, in 2020, late 2020 and early 2021, we had quantitative easing. I think that crypto could run into a weird thing where it starts to pop off in this post-halving era, in this bull run, in the QT phase. But if it was in QE, it'd be much easier to get into riskier assets with conviction. So that's one thing I'm watching. I do still have, conviction in some riskier plays, like smaller L1s like Alephium and the DEX on it, AN. I also have a bunch of Cardano native tokens, mostly LenFi and IAG. I'm watching Hunt because it looks a little undervalued based on what it's delivered and how it hasn't really changed, but the price has come down. But I still believe in Cardano. I still believe in Bitcoin and Ethereum and all these big projects. This experience has totally changed how I invest, though, how I've decided to look at things and what I think is okay to invest in. I'm much more okay making less returns for safer investments, and I like not thinking about my investments. I like not, making it my personality, my investments my personality. And from this experience, I think, that's a good way to go about it. Have you ever lost any money in crypto? Have you lost this much money in crypto, or did you also take a loss on Cardano? If you've taken a big loss in crypto like I have, let me know down in the comments. Let me know what you lost and what you lost it on. What did you learn from the experience, and how can we all learn? In the comments, we can make this a big learning experience and just kind of grow together and glow together and make each other wealthy with some better advice. Let us know in the comments and we'll be happy to read it, and I'll respond to all of them. Other than that, I hope you enjoyed the video, and we will see you in the next one.